Well, good morning. I see there are just a few people still coming in to take their seats. Welcome, welcome. We are so glad you're here to participate and hear about our global update from our colleagues from around the world. I had the opportunity to sit in with them yesterday, and honestly, it is inspiring to hear what's going on and to be kicking off our Knowledge Circle, our international and cross-border Knowledge Circle at this conference, and to then roll right into this session today. So thank you for being here. I'd like to introduce our esteemed panel. First of all, we have Noel May. He is the CEO of the Financial Planning Standards Board, commonly known as FPSB. This is our global standard-setting body for the financial planning profession, with member organizations in 25 territories that certify over 153,000 certified financial planner professionals worldwide. Noel advocates for recognition of financial planning as a profession and promotes the value of CFP certification with governments, regulators, standard-setting bodies, and firms at a global level. So thank you for being here, Noel. Then we have Steve Helmick. Steve?
Hi, Jeff.
Steve is the Executive Director of Financial Planning for AMP Limited in Sydney. I don't know about you all, but I just think an Australian accent's awesome. With more than 4 decades of experience in the financial services industry, he plays a key role in leading AMP's financial planning businesses, which have over 1,000 CFP professionals in their ranks. Mr. Helmick also chaired the Financial Planning Association Board, FPA Board, from 2002 to 2004, and was awarded life membership in FPA in 2007. He's also chair of the Future 2 Foundation. He's currently chairperson of the FPSB Board of Directors, and his term on the FPSB board ends on the 31st of March in 2016. So, Steve, thanks for being with us. We have with us also Ulf Manhart. I'm sorry, we should have applauded Steve. My apologies. So we have Ulf Manhart. Ulf, thank you for being with us today. Ulf is a recent transplant. He is German and a Brazilian citizen, but has recently moved to Vienna, Austria. While in Brazil, Ulf helped found the IBCFP, the body that grants the CFP mark there. His company is UMA Financial Planning. So welcome, Ulf.
Thank you.
And then we have Vishal Dwan. Vishal heads a wealth management practice based out of Mumbai, India, Plan Ahead Wealth Advisors. Vishal spends his time equally on and Plan Ahead is a registered investment advisory firm that was set up in 2003. He spends his time equally on his domestic practice and global clients, and is passionate about practice management and cross-border solutions. And he's actually also a host on our Knowledge Circle. So, Vishal, thank you for being here. And to my immediate right is Wim Beemans. Wim is based in Ter Aar.
Perfect pronunciation.
In the Netherlands. And Wim has a company titled Wim Beemans Financial Planning, and he serves as a board member on the FPSB Netherlands, the body that grants the CFP mark in the Netherlands. His focus is on certification and education. So Wim, thank you for being here. So with no further ado, I would like to begin today by having Noel May start out and give us a broad overall update on financial planning around the world. Noel?
Great. Thank you, Janet. Thank you for that introduction, and thank you all for coming to our session this morning. I'm under a nice bit of pressure here because I have 10 minutes. Laura told me that she's going to cut me off. The nice part is I spend a lot of my time speaking around the world in countries where English is not the first language. So I'm going to go with the fast part here. Although I will say I see a lot of good international faces out here. Welcome, friends. And I just want to note as well, we have Sanki Morata, who's chair of FPA South Africa. We have Wee Hen, who's vice chair of our group in Malaysia. And we have Tim Coaches up the front, who's on the board of directors of FPSB. So I'm going to give you the quick overview of the global program, talk about some global trends, and then really leave it to the rest of the panel to dig into some of the issues on a country-by-country basis. As Janet said, FPSB is a global nonprofit standard-setting body for the global financial planning profession. We own the CFP and Certified Financial Planner marks outside the U.S., and we have organizations that administer the CFP certification program in 25 territories, including CFP Board as one of our members, which does the program in the U.S. Our mission is to benefit the public by establishing, upholding, and promoting worldwide standards in financial planning. And our vision is to have financial planning recognized as a distinct profession globally, and the CFP certification seen as a symbol of excellence in financial planning. When we talk about the 25 territories, 2 in North America, 2 in South America, we're in 1 in Africa, 1 in the Middle East, 7 in Europe, and 12 in Asia Pacific. This slide here is one that gets lots of attention when I travel around the world, because you see we go all the way from 0 CFP professionals up to over 70,000. And what you see there is really a reflection of the size of the territory, the maturity of the CFP certification program in that territory, how much the industry, the sector has come behind financial planning, maybe even at times the regulatory environment. But you'll definitely see a diversity of representation of our program in emerging, developed, mature markets, very different environments. But the theme is the world is coming to financial planning, the world is coming to CFP certification. You'll see also we finished up last year at 153,376 CFP professionals. We hope to be at 160,000 by the end of this year, 75,000 or so, which will be in the U.S., 85,000 outside the U.S. Growth of the CFP certification program has been excellent over the last decade, and you'll see we've doubled the number of CFP professionals worldwide, this number inclusive of the U.S. And here you see a little pictogram of what the regional representation of the global CFP professional community looks like. And what you'll see is while we got our start in North America, it's becoming increasingly more a truly international program. In terms of who's adding to that growth, the good news is the oldest CFP certifying organization was one of the largest contributors to the organization, CFP Board, and it was matched by one of the newer groups, FPSB China. Other large contributors are Japan, again, an organization that's been around from the very beginning, and also South Africa that you'll be hearing from on this panel. In terms of percentage growth rates, it's our kind of bricks. So not surprisingly, if you go from 200 to 300 CFP professionals, you have tremendous growth. And so here are our newer up-and-coming groups. But again, you'll see a lot of potential in the global community. For those of you who were at the CFP board session this morning, I love where the conversation got to, and there was a discussion about men and women in the profession, and they were talking about old, male, and stale. I didn't say that. That was one of the women that said that. But basically, here's a picture. He's not that old. He's not that pale. This is a CFP professional who's comfortable. He's practiced. He's very confident. But this was your typical CFP professional, and it was male, middle-aged, whatever that is now. Maybe didn't have a bachelor's degree, but certainly had a lot of experience and might work in a boutique firm. And he's changed. He looks different. That's what he looks like now in China. The majority of CFP professionals in China are female. In fact, the majority of CFP professionals in Thailand now are female. They're young. At a minimum, they have a degree. Many of them have masters. They actually do not have necessarily a lot of experience, and they work in large firms predominantly. In China, firms of 100,000 plus people. So that's the quick overview of the profile of the CFP professional community. But what you'll see is it's diverse, it's growing, it's dynamic. And the conversation with CFP Board this morning, where they talked about how do we get the mature groups and the young people mentoring together, how do we get women in? And I'm sitting here going, let's talk. We've got some young people, we've got some women. Okay, global trends at a very high level. The largest impact on financial planning globally and CFP certification is what's happening at a regulatory level. And around the world, it used to be the focus was on rules, and then regulators shifted to principles-based. Then the global financial crisis happened, and what regulators said is, we're coming back and we're taking a consumer protection focused. And basically, while regulators are typically focused around the sale of product and successful outcomes for consumers in the sale of product, they've started to introduce competency, ethics, CPD requirements around those providing products. What's happening with that is there's a bit of a squeeze happening and a bit of confusion internationally between, well, what's a seller, what's an advisor, what's a professional advisor, what's a financial planner. We think it creates an opportunity, and this is, try working this slide out fast, but basically our proposition is, on the left side, it's really the compliance-driven side, it's the product-focused side, and there's a role for government to say we need positive consumer outcomes so that consumers can have confidence based on the compliance component around the delivery of products. But on the right-hand side, this is about trust-based relationships. This is about a fiduciary duty of care. This is about starting with the client and working out to the solution and the product. And that, we think, is the role for the professional body community. And so we think we're proposing to regulators around the world an opportunity for partnership, that it's not a question of either or. We work together and we provide the solution for the ethics, the competency, and the professionalism. We developed tenets for oversight of financial planning within FPSB, and that is to say, protect the title financial planner. We don't think anybody should be able to call themselves it. There should be some basis in that. There should be a fiduciary standard of care for those in the space. And ultimately, we'd like to see regulators relying on the CFP certification, the financial planning professional bodies, to look after the process, the development of practice standards, competency, and care. Regulators are also focusing on financial literacy. FPSB has become a member of the International Organization of Securities Commissions because we want to bring the voice of the financial planning community globally to regulators globally. And there's a lot of discussion there around strategies for financial literacy. We're also talking to the OECD about their national strategies for financial literacy. Our proposition is, it's great to teach people about financial literacy, but ultimately, and regardless of their circumstances, they're going to need to be able to work and find competent, ethical, and qualified financial advisors. And so our approach is, don't just teach people, embed the process of financial planning in your teaching and explain to people that they will benefit from knowing how to find and working with a competent, qualified financial planner. Read CFP Professional. There's a lot of conversations about professionalism. I'm not even going to touch on this because I think everyone else on the panel will, but I love that we've moved well beyond what is the least we have to do, and a lot of the conversations we're having internationally is what is the right thing to do to be a profession to serve clients. I talked about these young people working in large firms. Internationally, CFP certification is a large firm story. It's being driven by large firms. We did some research with 92 firms representing 12 countries, 120,000 advisors, and over 11,500 CFP professionals. And we asked those leaders, what do you think about CFP professionals? What do you think about certification? What value do you put on it? And the results were very reaffirming. Basically, the leaders told us CFP professionals are more productive and more profitable, and that's a good thing. They also told us that they lower risk and complaints from clients, and that makes a lot of sense because going through the process of knowing their goals, needs, and objectives, making recommendations based on their needs, you're going to have more satisfied clients. And that was the result, and more satisfied with their CFP professionals. As a result, firms are actually investing more in the careers of CFP professionals and contributing financially towards them getting a career in financial planning and actually being promoted within the firm. Result being, 80% of the firms told us that they plan to hire more CFP professionals in the next year. That's just so that I can get to Laura and say, see, 10 minutes and done. Luckily, I grew up in Ireland, so that allows me to speak quite quickly. But again, the takeaway is, it's a fantastic story for the emergence of financial planning, the emergence of CFP certification globally. We're very pleased and honored to have FPA invite us to this session, and we see a wonderful opportunity for partnership with you, the mature CFP professional community. Thank you.
Thank you, Noel. That was, not only was that great information, but you really did nail it in 10 minutes. Well done. So our next speaker will be Steve Helmick, and he is going to update us on what's going on in Australia.
Thanks, Janet. Thank you very much. Just want to make it 100% clear before I start that I will be speaking Australian today. And if anyone can't understand, I'm sure there'll be translated copies available later. I've been asked to talk about what's happened in Australia 5 years ago, today, and into the future, and some of the effects on that, on the whole financial planning profession. When I look 5 years, state of the profession 5 years ago, I think of the things that have probably created where we are today and some of the change. And as Noel made the point, whenever you get things that sort of shake consumer confidence or consumers get hurt or lose money, and in Australia's case there were some fairly high profile failures at that time, governments tend to come in and want to take action. They tend to want to grab at the whole problem by the scruff of the neck and give it a shake. We had a financial planning licensee fail and retirees lost a lot of money. We had product failure, around the second and third bullet points are product failures there. And all that created sort of this, I suppose, bit of a crisis in the confidence in the financial planning. But at the same time, the move to fee-based advice in Australia was gaining momentum. And companies like my own had made the step that we're only going to move to a fee-based advice model going forward, and that was gaining momentum. So at the same time as this great crisis was going on, there were good steps in the move towards fee-based advice in Australia happening. There's no doubt, as same in America, that the global financial crisis did test the relationship between planners and their clients. But what was really interesting, I think, in Australia, when you talk to financial planners, very few clients were lost during that period. And I think it was a bit of a testament to the whole growth of the profession in Australia that planners no longer base their value proposition about beating the market or getting better returns in that. They base it more on the holistic approach to advising and planning for people's lives and steering them and guiding them through times like that. Sure, like around the world, there was some panic and things like that, but basically, those who stayed the course and stayed with their planners have seen it through quite well in the space. New technology certainly started to emerge, like from any crisis. I'm not one who actually sort of believes that people will wake up tomorrow and all of a sudden start thinking about their financial planning top of mind. I'm not one who thinks that they'll flock to the internet, but I do think that over time, tech-enabled advice which will complement planners and work with planners will be very important and will actually help us get financial planning out to more and more people around the world. In the case in Australia, about 1 in 5 people who should use financial planners actually uses them. And for the same sort of reasons you see in some of the sessions here, why they don't use them, about, they don't think they've got enough money, don't understand the process, they're scared about, all those things are the same reasons in Australia. CFP professionals are about 5,300 then, and as you saw from Noel, it's about 5,500 now. And so it's been pretty flat, the growth, but that's going to change in Australia. Just hang on to that point. So my point on that first slide is never waste a good crisis. And I don't think we have in Australia, and I think we've been able to build on that. What's it like today? The FPA in Australia made a strong move towards being a professional association from a member association. It's a little bit different to here. The FPA is involved with both CFP accreditation and is also the professional association, the member association, so it's one and the same. They took some pretty strong steps to get there and convinced a lot of people that was where they should go. So they're trying to sort of take this high moral ground. And for a while, for some of them, I think in the FPA, it was a bit of a cold, lonely place. But they're through that now and they're in a good position. The thing that came out of the crisis, as I said in the last slide, was a thing called FOFA, as we call it in Australia, the Future of Financial Advice Reforms. These reforms are actually come into law now. There is some, I suppose, amendments to them as we had a change in government in Australia, which I think makes them more workable. But the aim of them, and you can't argue with the aim of them, is to get more people using advice and get more confidence in the financial planning systems and processes and that. At the same time, in this current day, if you pick up a paper in Australia, financial planning is unfortunately on the front page because of some issues with some of the larger companies. A couple of the banks are being profiled. Not for what they've done now, but really for something that happened 4 and 5 years ago. But there's some journalists who've gone on the story, and it really is just, I suppose, never ending. CFP professional numbers at 5,500. But in the last month, and this is when I talk about the growth of CFP professional numbers, the 4 major banks and my company of AMP have all stated their intention to move all of their financial planners to CFP or Masters of Financial Planning status within 5 years. That's a big thing because those people have 65% of all the financial planners in Australia in their ranks. In Australia, there's about 16,000 financial planners. So there's going to be a big move, and it's great for the FPA because they'll see that more people will be entering the CFP accreditation program and a certification program rather, and that's I think you'll see the numbers in Australia will start to grow again. As I said, 1 in 5, and we'd also noticed the regulator, because of the failures, has been under the pump, and when you get regulators called to government committees and Senate committees like we have in Australia, you know one thing's going to happen. They're going to come out swinging. And they'll be looking now to take some scalps and take some action from the FOFA. So I think we are, though, at the turning point for the profession, where financial planning has got the chance to be really seen as a profession. And in the future, this is what it'll look like. You'll have all planners at CFP professional level or equivalent. There's Masters of Financial Planning and another designation which is not as strongly supported in Australia. Degree entry to financial planning will be mandatory. Already some people have taken that stance, but I think it'll be just the way of the future as it's seen as a profession. I do believe consumer confidence will grow, and it will grow from the reforms, but it will also grow from the desires of the large players to push them up. Strong alignment between FPA, more Australians seek advice, and I do think that tech-enabled advice, working with planners, and stronger educational alignments with universities are going to help fuel the growth. And I think financial planning will be a valued part of Australia's lives. Just quickly on this, the regulatory changes, as I said, the future of financial advice. We've got a best interest duty, fiduciary, like what you'd say here. Basically, it means that a financial planner must always put the client's interest first. And it's pretty simple. Whenever they write a financial plan, and you can't transact or do any business with a client in Australia unless you have a financial plan in place and get an authority to proceed. And they've got to put the client's interest first and make sure the client's interest is put first, and also that the client's in a better position as a result of the financial plan. And conflicted remuneration, there was sort of tossing and throwing on that, but I think we've got to a fairly good outcome on that, which is workable. The accountants are getting in the act because they're now subject to the same financial services reform. They've pushed tax agent reform across to the financial planners world. So financial planners are going to have to be licensed because of the fact they do give tax advice as well. So there's a bit of a blurring of the lines there between accountancy and financial planning, and entry levels are increasing, as I said. The impact, as I said, public confidence is low at the moment, but it will lift for sure. And aim is to see more advice going to more Australians. And I make the point again, tech enables a big part of that, and I think scoped and scaled advice, and part of that will see more Australians put their toe in the water and start using financial planners. And to sort of Noel's point about the difference in CFP professionals around the world, I think you'll see a whole new cohort. I look at the young people coming into the profession, determined to become CFP professionals, determined to enter into this new world of financial planning, and it's very positive. And for me, professional planners, confident consumers, that's success. And I think I'm passing to Ulf. Is that right, Ulf?
Thank you, Steve. I think it's astounding, the possibility of having 65% of your financial professionals be CFPs in 5 years.
It'll actually be more than that because there are CFP professionals outside of that 65% already there. So it's going to be a big number.
But I just want to clarify one thing. As you're talking about the FPI of Australia, it's FPA. FPA.
That's the translation you need.
Our next speaker is Ulf Manhart, speaking about what's going on in financial planning in Brazil.
Thank you. Jenna, thank you for having us here, FPA. Laura, Sean, for the opportunity of speaking a bit more on this international platform that is getting more and more importance within the FPA community. I just have to go a little bit further back in terms of explaining this slide and the growth of the CFP professionals in Brazil as the 5 years that I was asked for. We started up in the year 2000 in Brazil, and in the year 2002, we got the affiliation internationally, and we started certification in 2003. You see the stable number until 2005, when we were able to attract the Investment Bank Association in Brazil to the CFP mark, and understanding that CFP is the certification in Brazil, and turned out more and more to be the certification in Brazil that covers all client-facing activities in the financial industry. And once we had the Bankers Association with much deeper pocket than the small group of people that started up the whole venture in Brazil as our partners, we were able to really get into the market and start to promote CFP as a profession. And so therefore we grew in the first years kind of 100%, and we went on, and we are now up to 1,544. This is from February 2014. And if I show you now the next slide, where we figure out how many candidates are sitting at every exam, you see that we have a steady growth there as well. We offer an exam in 4 modules, and we have, of these 912 in June 2014, we had about half of them sitting for modular, for the modular way of getting the CFP exam done, which can be done within 3 years, and we had about other half challenging the overall exam. So our pass rate, which is around 30%, is only counted on the ones who challenge the overall exam. And if we look at the exam that we just did in June, we had this 912 people sitting in, and we had now 233 new CFP certificates approved, which are ready for the certification process. In fact, most of them applied for the overall experience criteria, and now we will have the certification event next week, taking the advantage that Noel May will be down in Brazil, as Brazil is hosting the annual IOSCO meeting this year. And this will bring the CFP certificates this year to 1,700 at the year end. So our projections, just to get on with the statistics, 2014, 2015, 2,200, and in up to 2017 we hope to double again in this 3-year period. So we are very, very positive in the outlook of the need of CFP as a certification of excellence in Brazil, not only driven by the private banks which are associated to the Bankers Association, but also to all the family offices which are more and more finding room in the market space in Brazil. Now I went one. So if I talk about the regulatory environment in Brazil, it is a very fragmented relationship between a financial planner and the overall regulatory environment. But everything is based, or most of the financial advice, portfolio management, and investment product selling is all regulated by this Brazilian SEC, which is the CVM in Brazil. And they are very similar in their settings as the SEC here in the US, strongly related to the IOSCO, and therefore in constant movement to improve regulations and to adapt to the learnings out of the crisis 2008-2009. So other than that, the banks are being clearly regulated by the central bank. The central bank has a very strong position in Brazil due to all the centralization of foreign exchange and all that. And insurance, retirement and all that have their own regulation, being it SUSEP and PREVIC, so they are all differently regulated. And as we are positioning the profession of the financial planning as an overall certification that uses as the outreach to the end client the licensed professional in all these different areas, we have to cope with all these licenses and with all the different autonomous autarkies that we have in Brazil who regulate these professions. So therefore, the self-regulation is a very interesting subject in Brazil. We understand that the CFP profession is more and more being self-regulatory. In Brazil, we want ourselves to be distinct and be clearly the top in terms of certification standards and adherence to clients, to ethics and to compliance. And compliance is the name of the game in the moment. And in Brazil, the pressure from legislators to get everyone in line is not only compliance itself, but it's mainly also its enforceability. And therefore, the financial planning per se, if you look at that regulatory framework, the profession per se has no regulation at all. And the perception in the market is that financial planning is now the right moment for it, as we have a new economic environment, we have lower inflation. Brazil, as you probably, most of you know, had a very high inflationary history. And so most people that are 34 or 35 to 40 years and older, they still have that memory and they still have to figure out how to challenge that this new stable economy and all that compliance issues and the history of informal financial world in Brazil gets into the new compliance world. And that is a major challenge in Brazil, which leads us to the fact that we think that CFP mark is extremely important in Brazil, and it's getting more and more the recognition from the professionals, the professional side, for competence, compliance, and excellence in personal financial planning. And it's our task to get that out to the general public, that the general public starts to understand what that is all about. And for that, we need a lot more of support from educational providers. And that's the picture of Brazil. I pass the word now to Michel.
Thank you so much, Ulf. It's so fascinating, the difference of where we are in different places of the world in terms of recognition and regulation. Vishal.
Thank you for giving me a chance to speak here. It's good to see some Indophiles in this audience and some Indians, and obviously a lot of people who would like to know more about India. I think in addition to just talking about the state of the profession 5 years ago, right away, and our view of the future, what I'm going to do is also take this opportunity to give you a little bit of a perspective within 8 minutes of what else is happening in India in terms of the financial landscape. And I think that will allow us to put things a little better into perspective. So this is flashback 2009, the global financial crisis. We had, in spite of everything else, a savings rate of 32% of GDP. The economy size is about $1 trillion, so that's a lot of savings. Interestingly, unlike many other parts of the world, about half of it was going to financial assets and another half to physical assets, essentially real estate and gold. Now, in this environment, we had about 3 million people giving financial advice or distributing financial products, out of which there were about 595 CFPs. So it's a small community at that point in time. And essentially, the CFPs, those 595 of them, were, unlike a lot of other parts of Asia, there was about 20% of them doing independent and running independent practices. The rest of it was largely people who've gone back to work for larger institutions. And then we had what I call the Usain Bolt of regulation, which is India had upfront sales load abolished on financial products with a time to adapt of 45 days. The environment at that point in time this was August of 2009, so we were just coming out of the global financial crisis. Obviously, a lot of those 3 million advisors had no idea about what to do, and they obviously had 45 days to figure out what to do. So it was pretty tough. At the same time, you had a set of consumers who were very price sensitive. And one of my favorite examples of that is that India is probably one of the few countries in the world where the largest luxury car sales happen basis the mileage that the car gives in terms of fuel efficiency. So we're talking about a consumer who's very, very price sensitive, or at least was very price sensitive in 2009. And we had business models in financial services, very, very distribution-led. So there were a few fee-charging advisors. I can see some of them in the audience here, but largely it was a very distribution and commission-led kind of business. Fast forward to 2014, surprise. From a 50-50 mix of financial assets and physical assets, you've now seen more money flow away to physical assets. And that's because India's been suffering from a serious inflation issue. For the first time, we've started to see some serious work happening around getting inflation under control. And therefore, we believe that there will be a trend which will move back towards financial assets. In this environment, you had advisors, distributors, agents, who I put in one category, go down by about 27%. That's still a large number of people. It's about 2.3 million. So it's not that we're talking a few hundreds. And interestingly, the number of CFPs have gone up 3 times. The other good news is that there are more and more people setting up independent practices. And I think that's probably an indication that people have more confidence about the future and are willing to experiment with new models as regulation forces them to maybe do it, or they realize the potential of what's available for them. In 2013, we had our own investment advisor regulation come in. Luckily this time, if you were an existing business, you got 9 months. If you were just setting up, you had 3 months to go ahead and do whatever you had to do around it. So things are getting much better. We also had new share classes come in. So we finally had what is called a direct share class come in India. And interestingly, about 25 to 30% of all monies in categories like mutual funds now have moved to a direct share class, which is much cheaper. We've had consumers now ask for value over price, and I think that's a big, big shift. And we're starting to see new business models starting to emerge. Some online, a lot of them offline. A lot of people are experimenting with what works and what doesn't. And I think consumers are demanding some very, very different things from their advisors. However, one of the challenges in this whole process is that advice could well be getting a little polarized, which is that there could be a set of retail consumers who could actually be losing access to advice, because obviously business models could be potentially moving towards the wealthier clients. Here's what we believe is happening as we move forward. So I think we have these 3 people out there in the landscape. We have the consumer. Now what's happening with the consumer is he's out there saying that, I'm now exposed globally. And essentially, what I want to be doing is I don't want to be sold any financial products anymore. I want to be understood in the right manner. I want people to spend time with me. I want people to give me the right advice. We have a significant increase in wealth taking place. A lot of the surveys that now get published seem to show some disproportionate increase of wealth happening in India. And you're starting to see the Indian become a global citizen and, of course, have very global families. And it's very interesting when you look at the US, for example, and you find that there are about 3 million non-resident Indians in this country, spread across the globe, spread across multiple states. We've had an ecosystem where regulations forcing transparency. A lot of times, like Noel mentioned, this is, regulations demand it, but what practitioners do is they say, let's go a step ahead. Let's think forward. Let's figure out how we can give clients what they truly need. We've got technology reducing information asymmetry. I think a lot of what we did in our businesses some time ago was really about having more information than the consumer did. And I think a lot of that is going away. And I think a lot of that will disappear even more as we move forward. And we're probably going to see a lot more rebalancing towards financial assets as the real rate of return starts to get positive, as inflation starts to get under control. And of course, as a planner, we're going to be seeing now customized solutions. We're seeing a big focus on value addition. We're seeing technology drive models for retail advice. And hopefully, we're going to see some niche segments emerge from a country like India. And last but not the least, we're starting to see the first emergence, or expect to see the first emergence of ensemble firms as well. So here's a quick overview on the investment advisor regulation that I spoke about. This came out in April 2013, essentially fiduciary in nature, the first regulation in India which directly spoke about fiduciary. It set aside clear suitability standards, risk profiling, data on clients, income, assets, expenses, liabilities. All of this information needs to be in place before giving advice. All disclosures of potential conflicts of interest, qualification and certification requirements for everyone who gives advice. And some of that is not easy because anyone who gives advice now needs to have 5 years of experience unless he's a postgraduate. CFP is one of the recognized marks that can be used from, for advisors. There are only 2 of them, so that gives a big opportunity for CFPs in India. Capital adequacy, in certain cases, higher than in other parts of the world. And clearly the segregation of advisory and execution services. And therefore, I think this is pretty much in line with what's happening globally in terms of trying to clean up things, get advice very clearly, client-centric. What's been the impact of all of these changes? It's been just about a year. But essentially what we're seeing right now is about 185 people who've registered. A large number of advisors is actually still using exemptions because there is a category of, I think, 11 exemptions that you can use. But more and more, it looks like the regulator's going to take possibly punitive action or something else to go out there and promote the RIA mark. The consumer awareness around this, unfortunately, is pretty limited. So either, we've got to have the regulator go out there and talk about this new regulation, or we've got to have people, get punitive action taken against, so you could potentially have more people sign on. Obviously, the good thing of all of this is that more and more organizations and more planners are getting very process-oriented. And therefore, a lot of advisors are now thinking scale, unlike earlier where essentially a lot of people thought about solo practices. You're seeing cross-border opportunities obviously open up as people recognize that advisors in India are as regulated as advisors in other parts of the world are. And obviously consumers are all global. There is clearly the painful part of compliance as well, which comes with all of this. And I think India is no different. We're going through some of the same challenges. A lot of this will hopefully get solved by technology. But I think it's also making us look at our businesses that much harder, look at our practices, look at what we're doing in there, ask ourselves, is this truly client-centric? And the greatest thing that's happening around is that we're now seeing a large number of study groups come up in India. There's a whole amount of sharing happening in there. There is a delegation from India, which I'm sure a lot of you have seen already. I think there's a lot of what comes into our learnings from the conference, and a lot more that comes in with the time that we spend with each other, understanding how our practices are adapting to things that are already happening or which we anticipate will happen in the future. Thank you.
Thank you, Vishal. So interesting, two primary marks in India, and here we have a proliferation in the States of like 140 different designations. It's amazing. And next we have Wim Beemans, who will be speaking with us about what is going on in the Netherlands. Wim.
Thank you, Janet, and thank you for giving us the opportunity to tell you something more about the situation in the Netherlands. It's going to be a little bit boring, I think, because also in the Netherlands it's all about advice versus product selling, regulation, and failure. And, well, what we saw about 5 years ago in our country, that mainly banks and insurance companies were in charge of the industry. They had a strong lobby to the government, and everything that they did was more or less focused on selling products and everything that was to it. The educational environment for financial services in the industry was also most banks and insurance company based, and that meant that most educational programs were focused on marketing and selling products and not that much on the education itself. There was not too much transparency in the market, but things were going well, profits were well with people as well, returns on investments were good, so who cares at that time? And at that time, only all the settlements in payment remunerations were regulated in the product and seldom in the advice. If you look at the industry itself, we like to think that financial planning is a relatively young profession. I would like to remind you of the Florence and Venice in the medieval times, and also the Netherlands in the 16th century. And there were also private banks and financial planning and wealth management was very common there. If you ever come to Amsterdam and you visit the canals and you see the nice buildings around it, remember those used to be banks in the 16th century with a lot of private customers at that time. But after 2009, everything changed, and the role of the banks and the insurance companies diminished, and intermediaries and advisors were searching for new business models. Self-regulation was one of the things that we tried to do in the industry, but it failed. And the government regulation became stronger and stronger. What we see now is that since 2013, partly and almost in a whole in 2014, we have a ban on commissions. And we did have some more time than the people in India to adapt to that, but the result is the same. Still, the people working in the business are not knowing what to do, and we are searching for business models to adapt to that, and it's really a tough thing to survive. What we do see is that the general income of a financial advisor dropped dramatically. Some 10 years ago, the mortgage is one of the main financial products in the Netherlands that's financial planning is based on. You could earn something like $10,000 on executing one mortgage. At this moment, it's about 2,000, 2,500, and at that time it took about 10 hours to process it, but due to regulation it takes now about 30 hours to process the same deal. So you see a lot more work and a lot less money. So it's hard to find a new business model and trying to cope with that. But then again, we see that all over the world people are facing the same problems, and we're not alone out there, so we have a lot of other smart people to try and find solutions for that. At the same time, what we see is that the consumer awareness is growing, not as fast as we think it should be, and we need consumer awareness to accept advice, because all generations are brought up with the message that advice was for free, and now we have to sell advice, and that's I think one of the greatest challenges that we have in the coming time. One of the good things is that the growing transparency and the simplification of financial products makes it easier to make consumers aware of what's going on. What we expect, or maybe what I expect, I don't know if everyone shares my opinion in the Netherlands, is that there will be in the future a growing need of independent advice. We are used to think of a horizontal way of building up our practice. So more education, more knowledge, more training and things like that will bring you to a higher level. But what we also see is that there is a vertical division in independent advice and advice that is tied to financial institutions. And I think that that aspect in our industry didn't have the attention that it should have by now. Large firms in the Netherlands, they will have to make a decision. What do we do? Do we focus on advice or do we focus on selling products? And what we see now in that phase is that the advice part, they focus on the high end of the society, the wealth management and things like that, and the selling of product for the rest of the society. Regulation has been very tight the last few years, and it's becoming more and more. And I think in the near future, this year, next year, maybe the year after, in Europe we have the MiFID regulation. It will even be larger than it was at this time. But then again, I think after that time it will reduce. It's, well, we're looking at a balance, and I hear people also in the regulatory environment telling now that maybe regulation has gone too far, and we see slightly a little pullback of regulators at this moment. Consumer awareness will grow, and I think that is one of the biggest challenges that we have as an industry to contribute to that. And when we look at financial planning, the old situation that the plan is the thing that we have to do, and I think that will change. It's more a way of coaching, and coaching driven by events in people's life. So it's more the planning and not a plan, as one of the America's presidents said in the future. It's a planning, Stuart, not a plan. It's the economics, not a plan. The situation of, the regulatory changes. Well, we are now ruled by fear of regulation. It's full of disclaimers, and we are now working more for the regulation at this moment than sometimes for our clients. But again, that regulation, that forces the industry to think about a change of business models. And that is something that, that is very important, I think. The different roles of advisors with large firms and banks and insurance company, as I said, the vertical division is very important as well. And I think regulation is and has been the trigger for change in the industry, and that is what is really needed, a big change. Well, I think that's about it, what I can tell about the regulation. And if I look at Laura, my time is yours. Oh, yeah, I got 1 minute left. Well, that is something I want to tell as well. At this moment, the Netherlands has 135 CUP professionals registered with FPSB Netherlands. That looks a little bit small, but we're happy to say that we are in talks with another organization, our sister organization, FFP, which is a far more larger organization than ours, with 3,800 registered financial planners. And we hope in a short time to merge, and then that will reflect, I think, a better place of the Netherlands in the International Financial Planning Society. Thank you.
Thank you, Wim. You know, I think it's so interesting. You spoke to the need to really be exploring business models and finding ways to provide access to all provide access to advice for all consumers. And I think there was a theme that kind of resonated on this panel. And it's also a challenge that we recognize here in the United States, trying to figure out business models that really can serve the middle market. So it's everywhere in terms of our challenges before us. So thank you, esteemed panelists. You all were so helpful in understanding what financial planning is looking like in all different places around the globe. I'd love to give you just a brief update on on FPA, and certainly where FPSB is focused on the public by creating a professional standard around the CFP mark, FPA is really focused on the CFP professional and helping the professional to be successful. And we do this by providing resources to help planners be more productive, more profitable, and more successful. And for FPA to really be the one connection, the one resource that planners can turn to for a variety of different resources and to help advance the profession as well as our members' businesses. So we've always believed in one profession, one designation, and we certainly, at the same time, we welcome all who support the financial planning process. We have a number of allied professionals and non-CFPs in FPA as well. We believe in the long-term vision of building a profession around a set of criteria and standards that are certainly in the best interests of the public and that are represented by the CFP marks. We have our unwavering support of the CFP marks is not intended to denigrate the professionalism, ethics, or skill of any non-CFP professional, but we do recognize the importance of having to rally around one credential for the future of the profession and for the benefit of the public. FPA is also committed to a fiduciary standard, and as an organization, you probably know that we are compensation neutral. We believe that advisors of all business and compensation models are certainly capable of putting the interests of our clients first. So in the U.S., there's certainly an ongoing debate over compensation definitions and positioning around the merits of the different compensation methods. And we really believe that conversation is hindering the advancement of the profession. We really believe it's about full and fair disclosure, because we know people, our colleagues, in all business models and all forms of compensation methods that are, in fact, ethical and competent. So we'd like to really be steering that conversation to one of full and fair disclosure as opposed to simply compensation. We have a shared commitment to the CFP marks and the need for an uncompromised fiduciary standard that really highlights the need for this ongoing conversation and collaboration with our partners abroad. So while certainly we've seen the laws and regulations can vary tremendously from country to country, the core drivers of financial planning remain the same. This means that all planners, regardless of their geographic location, have to learn and offer, have to learn from each other and grow together. The conversation that's taking place right here at FPA Annual Conference with 19 countries represented, I think it's just awesome as we come together, and it's an opportunity for us to continue this conversation in person and also online. If you have not yet participated in FPA Connect, please consider doing so. We have a virtual conversation center where practitioners from around the world can gather and discuss issues that are important to you. And it's truly been amazing to see some of the conversations that have bubbled up in our all-member forum. And now we have our new knowledge circle that is focused on international and cross-border issues. And as I mentioned, Vishal is one of our hosts of that community. It's just a fabulous opportunity for you as our members, and also a fabulous opportunity for FPA to really develop some content and some research designed to make our planners more knowledgeable while also increasing overall competency. So I'd like to also speak to our award-winning, peer-reviewed Journal of Financial Planning, which is certainly recognized globally as the definitive research source for financial planners. We have a new relationship with the Academy of Financial Services. I just accidentally turned my page, I'm sorry. The Academy of Financial Services to co-publish the Financial Services Review. And it will allow us to bring additional academic research and insights into the planning community. And of course, we have the FPA Research and Practice Institute, which is conducting practice management research so that we can help planners understand where some of the gaps are in our businesses and what we need to improve in our businesses to be more successful. To further support the need for additional conversation and collaboration between planners, I just want to encourage you, please check out the Knowledge Circle. Get involved in FPA Connect. It's wonderful when we have this opportunity to meet face-to-face and have one-on-one conversations. But in lieu of that, what an awesome opportunity to be able to continue the conversation from around the world, regardless of where you are. With that, I would like to really open it up for questions because we have our great panel here with so many different perspectives and expertise.
Yes, good morning. Good morning. My name is Livo Christoph. I come all the way from Sofia, Bulgaria, and I would like to thank FPA for putting together such a wonderful panel. One thing that strikes me through all the speakers made reference to is that regulation is putting a lot of pressure on the profession and business models around the world. But I would also take away that there seems to be a convergence of regulation around the world, more towards fiduciary style, client's interest first, best duty. What I would like to do, if you allow me, is not actually to ask questions. I'll have this opportunity via the international and cross-border knowledge circle when I get back home. But I would like to extend an invitation to make a plea, particularly to the FPSB affiliates in Europe. Guys, please help me help you. The statement I would like to make is very simple. A tremendous opportunity for the CFP mark has opened in Europe. It will be closing gradually in the coming months, and let us not lose that opportunity. What that opportunity consists of? The regulation, Netherlands, along with the UK, is a leader in banning commissions, protecting the clients' interests, but there is a pan-European regulation in the form of a slew of directives, the major of which is the so-called MiFID, the Markets in Financial Instruments Directive, which became effective in June. And I would like to highlight two things about it. Number one, Europe is slowly moving out of regulating sales of products and to regulating financial advice. And number two, Europe has come up with an enhanced suitability standard. Now, why is this relevant in this conversation, and what is the opportunity for the CFP mark? What I did, I looked at the new suitability standard and mapped it to the 6-step process that I've learned from, and it maps quite nicely. And this is the opportunity for the CFP mark I'm talking about. The CFP mark can position itself in Europe as the standard, the mark and the practice standards around it, as the mark that meets, that is a safe harbor, that meets and exceeds the upcoming regulation. But this is not going to happen all by itself. Very few people are aware of that, and I don't want to take more of your time. I have put together a brief note about what the MiFID means for advisors. It lives on the International and Cross-Border Library on FPA Connect. And like Janet, I will invite everybody who is interested to please join the circle and access this resource. So I'm working on the ESMA side, and my invitation to FPSB, European affiliate organization, is let us work together to inform the regulators across Europe and the consumers across Europe that if they really and truly want to be in compliance, they can promote the CFP as being not only in compliance but exceeding the standards. So talk to me and let us work together. And my second point to FPA, my final point to the same affiliate is apply for the membership in the stakeholder group at ESMA to be able to participate in the process on par with the industry, whose interest is to keep things the same. Thank you very much. One final thing. One final thing, excuse me for the long speech, I will take perhaps more than 10 minutes. But I would like to thank FPA and my friends here, because as a member of this stakeholder group at ESMA, I was able already to put language into the technical advice that goes all the way up to the European Commission, that the technical advice around suitability and in particular around standards for risk tolerance assessment. And the language I put there was a requirement that firms, banks, insurance companies, and advisors should be able and should be required to demonstrate valid and reliable measurement of the risk tolerance. And this language and these standards for risk tolerance assessment I learned from Phenometrica, from Jeff Davey and Paul Resnick, whom I met here at the FPA. And if it wasn't for the FPA, I would have not known them. So thank you, FPA.
That was an excellent presentation from the panel, and I guess from Bulgaria as well. This is a really cool presentation. I like the movement. I see the growth with the CFP and the planning profession around the world. I'm Tony Mahabir from Canada. The question is, while we all agree with one profession, one designation, and it seems like the regulators are doing a lot of things to further financial planning, but it seems as well that they're falling short of recognizing one designation. And my question to you is there a country in the world, I know we're in 25 countries, of those 25 countries, have any of them taken the bold step of saying the CFP, instead of this alphabet soup of designation, like the medical profession and MD is all across the world, is there a country that has taken the step to lead the charge to say the CFP is that mark, or if it's not the CFP, what is it? And what is the FPSB and the FPA, for example, doing, as well as any of the other countries, to lobby the government or advocate with the government or collaborate with the government to do that? I think that would probably settle the debate once and for all if we ever get to that point.
I'll start. That was a giant question. Thank you for that, Tony. So I'll answer a bit of it. We are constantly engaging the regulators to get recognition for the CFP marks in financial planning. The truth of it is, for the most part, regulators don't seek to create an anti-competitive situation, so it's very unusual for regulators to come out and say, we will favor this one credential. We do have a situation actually in Malaysia where the regulators have come out and said, we favor these two credentials, and again, that's that balancing act. We've had situations in our territories where we have made great strides getting them to recognize the value of a professional body, and they have recognized our organizations as the professional bodies for financial planning, South Africa, UK. But in addition then they say, but we also then must recognize these others. And this is going to sound heretical, but I'll say it anyways. What the heck, it's Monday morning. I'm less concerned about alphabet soup as long as you're clear what's soup and what's water. The danger we face is that in the alphabet soup, you're really comparing an afternoon course to the CFP certification program. And my feeling is if governments will at least recognize, Kevin Keller talked about it earlier in the CFP board, programs that have valid, reliable, meaningful exams, that have meaningful competency requirements, that actually enforce and discipline their own ethical standards. If there's more than one of those, so be it. Let us put forward our message of what CFP certification in financial planning is, and I think we'll all rise together, and ultimately we'll all come together. But I think right now what I'd love to see us make progress on is, yeah, there's an alphabet soup, but don't go below A, B, or C. The rest are something different. And I don't know if the other panelists want to speak to that.
I'm not sure there's much more to add, but I can give you one stat. And same point in Australia, ASIC's a regulator in Australia, they don't support any one designation. But in Australia, CFP professionals make up about a third of the financial planning marketplace, but they've only been responsible for about 3 or 4% of the actions by the regulator. So that in itself talks about a quality aspect.
All right.
Great discussion. Really, I just wanted to kind of a comment about that second bullet there, because I just think that is so critical, because like definitely what I'm hearing is, that it's going to determine a lot of, the breadth of clients that we're reaching, and then that we're not just focusing on those affluent clients, and how do we get our advice out to more and more clients. And it seems like it seems to be a persistent struggle now. And are people figuring this out, or is this kind of figuring it out on the fly?
Oh yeah, I think Howard, it's a good question, because when you think of professions around the world, professions don't say we only target rich people. Professions work across the community, from pro bono right up to very complex advice. I think it is one of the challenges, and I'm sort of quite bullish about some of the tech-enabled work I see in Australia, which allows planners to become more efficient. One thing I would say, though, that regulation changes in Australia around things like banning commissions and moving to fee-based advice and that, planners are actually earning more money and their businesses are worth more. Why? Because it's made them very clearly articulate their value proposition, and the consumer, the public, now understand it a lot more, those that engage with them. Now, I know it's a different environment around the world. I'm just talking about Australia, not anywhere else. So I think some regulation can actually help it and help that, but you're right, we can't let it get too complex, because in our country we talk about middle Australia and stretching regulation down there. We do a lot of pro bono work anyway, but we've got to get more and more Australians engaged with financial planners. That's a challenge.
Thank you.
I'd like to. I'd like to react on Lubo's story as well, and I'd like to tell him that we're working on it. A couple of weeks ago, we had a successful meeting in Vienna with someone from ESMA, and I think we had a chance there to lay out our proposition as ESMA did, and from both sides, we were very enthusiastic to play together in future, and as soon as the possibility is there to apply for a place in the advisory panel, we will take that opportunity.
Just a very quick question. I'll do it in South African, although a lot of people think I'm Australian. So, a lot of the panel have spoken about regulatory changes regards fees in South Africa. We've got RDR, which is the review of effectively fee structures in the country. But when I speak to a lot of people here and other parties that I've met offshore, they talk about the fact that they've moved to a fee-based structure. And when I interrogate the fee-based structure, though, all it is the current structure, and they've just changed the contractual means of payment. So it's facilitated by a provider as opposed to a provider being contractually required to pay them. So if I could just get a little bit of a better understanding of how that operates in the different countries that are represented here, it might help us understand where we may go forward. Thank you.
Yeah, I'm happy to go first. In Australia, it wasn't a retrospective change, so it was a change for clients moving forward, and it basically meant that at that time, with the exception of 2 bits of business, which I'll talk about in a minute, but from that time, any retirement incomes, any investment, there was no commissions on the products that were offered, and the fees would be determined between the planner and the client. And the fee would be based around what the depth of the advice was and the value proposition, whether it was ongoing. In some cases, it could be a one-off fee, just to write the plan, implement the plan. In other cases, there'd be ongoing. Sometimes it's set around an asset, sometimes it's flat fees, sometimes it's retainers. We don't dictate, it could be an hourly rate even. The 2 areas where it's not, for mortgages, still have commissions in Australia, and we only have basically term insurance in Australia. We don't have whole of lifestyle insurance in Australia anymore, and it's still on the term insurance. But eventually, commissions will go in those areas as well. There's a government, a regulator reviewing at the moment.
I'll just try to give an Indian perspective in here. Essentially what has happened there is that there has been a movement clearly towards greater disclosure on one side. So I think a lot of communication which was kind of hidden around costs has now come right up front on the table. And I think that's very healthy on one side. And on the other side, you are seeing multiple models now starting to emerge as well around, typically just like the rest of the world, retainerships, percentage of assets model. I mean, all kinds of models are also coming in there. So I think it's been at two levels.
So I hate to cut this off, but we do have a general session that starts at 11:15. So I would like to first of all thank our panelists for being with us today. So thank you. Please continue the conversations, on a one-on-one basis, and we'll see you in the general session.